This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Well, hello, this is Hall Martin with Investor Connect. Today we welcome back Paul O'Brien of MediaTech Ventures. Paul, thank you for joining us again.
Nice talking to you, Hall, again. Thank you very much.
Well, great. Previously, we talked a little bit about your vision of media tech and how the groundwork should be laid for a viable community. And we're both here in Austin, where it's a very thriving community. But maybe give us a short update about what you've been doing and we've been doing since our last interview.
Yeah, my pleasure. Great place to start. Always some more perspective on how things are going and whether or not our last conversation is bearing fruit and meaningful. Maybe I'll start there. The perspective we have in media innovation in particular, given our focus, but the perspective we have is that these ecosystems, these economies really need to develop and mature in order to serve investor interests the best. And to do that, we have to serve the entrepreneurs and teach the entrepreneurs. And so we do that, I think, by developing an understanding of who the people are, understanding who the incubators and what the education kind of resources are for investors and startups, by understanding where physically in a workspace or a co-working space or even just regionally, where within the region that we work can be most meaningful, by serving the common language and the infrastructure and the partners, making sure all those participants, those stakeholders of an industry are in place. And then lastly, by promoting that industry in particular. And so when it comes to media technology, that's what we do. And I think that doing those things collaboratively with lots of other folks, like I said, is really what enables founders to find the right resources and best connect with the mentors and the perspective that's meaningful to what they're doing. And likewise, that's what enables the investors to find the right opportunities that are meaningful to their interests. And so since we last spoke, we're racing at that. We've focused a little bit, and that's why I'm excited to catch up with you and share what we've been doing with everyone, because we focused in that we've learned to appreciate, and we've started to develop two things in particular. Thing number one out of that stack. Thing number one is much more collaboration with the programs, the incubators, the startups that are in the education space for our industry, right? Who are the other Techstars Musics and the 2112s in Chicago, to refer to a couple names that are in our industry? How can we tie together more of the other programs that think like we do and work like we do and are serving the same space? Since if we're going to expose and support all of these founders that are in our industry to the investment community, obviously we need to work together and know who those startups are. That's thing number one. And in that regard, we've hosted our incubator a couple of times. We've got a wonderful portfolio of early stage startups in media technology, and we're working very closely with other programs in the media industry. Thing number two is that we've made a lot of headway on the focus of regional development and co-working and the infrastructure, the place where these things occur. And in that regard, we've got some exciting partnerships that we're developing with Chicago, with Nashville, with New York, with the media hubs, as you might imagine, and certainly here in Austin, to ensure that there is a place where everyone can get together, collaborate, connect, really start to serve a certain industry, our industry in particular. And so 2020 is going to be an exciting year for us because we've got a lot of regional partnerships maturing and some announcements we'll be making throughout the world with regard to how to tie together where people are doing things in our industry so that those investors or other founders or advisors can find us online to be sure, but if they want to just show up at the right place, show up in the right region of town or at the right co-working space, we're going to help make sure they do that.
Well, great. Well, I see you have an upcoming event during the next South by Southwest, which will be upon us shortly. It's called Funded House. Can you tell us, our listeners, more about that and how that works?
Yeah, I'd be honored to. I think Funded House is pretty consistent with the same reason that we're here on the air with you, Hall, that Funded House is this notion that in teaching founders and in teaching investors, frankly, how to understand what startups are working through, what they're trying to accomplish, how they might match with the right investors, and likewise, how investors might identify the right set of expectations or set the right expectations for the investments that we're making. What we try to do in Funded House is create the physical experience, create the event, the in-world experience where that happens. And what distinguishes it from your typical meetup or an experience on the internet where we're trying to teach a lot of different folks a lot of different things. What distinguishes what we're doing in Funded House is that there's a focus on seed plus stage startups, which is to say that the audience is comprised of startups that are not at that earliest stage where they're still trying to learn about funding or venture capital, but they've already gone through the process a little bit. They've been validated by at least some angel investors and seed investors, and they're looking for those later stage rounds. And we're trying to connect those folks at Funded House with, again, explicitly, more of that venture capital partner, a general partner or a venture partner, or even an associate or principal, frankly, at a venture firm, that venture fund stage that is capable of serving that startup at that seed plus stage of funding. The experience is curated to match those two people in particular, rather than just every investor and rather than just every new business or every startup. And what's been magical about doing that is we've been able to not just curate the right kind of connections, but we've been able to focus the panels, the conversations, the events, the meetings and discussions that we're having there around that very distinct focus. What does a Series A stage of funding look like? What is an expectation or an outcome for an investor at that Series A stage look? And how is that different from the next stage, right? Can we and should we have different expectations if we're participating in a B round or even a subsequent round for that matter? It's enabled a refinement of the content of the experience and the conversation and the education that we're bringing together. And we're excited to do that through South by Southwest because, well, frankly, South by is where a lot of the media industry, and so it serves our MediaTech interests, but a lot of the media industry kind of collides with what's going on in technology and innovation. It gives us an opportunity to have a sophisticated conversation about funding for everyone, but in our case, with the media folks in particular.
Well, great. So you see a lot of these startups that have raised a seed round and now they're ready for their next round. What do you think are some of the biggest challenges they face when they go out to raise those follow-on rounds of funding? What mistakes do you see people making?
Well, I wonder if they're mistakes that the startups are making, or if they're mistakes or experiences that different startup ecosystems, different communities are used to being part and parcel with what they're doing as a business, as a startup. Here's what I mean. Maybe that was a bit of a confusing way to share an answer, to get it out of my head. What I mean is that what I see, what I think we typically see is that depending on where that startup grew up, if that startup grew up in New York, or that startup grew up in Silicon Valley, or that startup grew up in Austin, frankly, they tend to get different advice. They tend to get different perspective from the community. And that advice is not right nor wrong, frankly. That advice is attuned to how that particular region tends to work. In New York, for example, you've got a lot of investment banks and bankers, and you got Wall Street, you got a lot of finance professionals, of course. And so the numbers and the pro formas and the financials and the models and so forth are expected, right? They're what a lot of the investment community and incubators lead with, right? You got to know the math, you got to know the numbers. And that's correct, but it's also not necessarily what other regions of the world are familiar with and looking for. And so the mistake that's made is often as a startup matures, they are still fixated on the advice and the experience that they had where they are, and they don't appreciate that when you get into that next stage, that Series A and Series B stage, and frankly, you have to start talking to other markets to raise capital just because you need access to a lot of other investors. As you start talking to those other markets, you've got to appreciate that they may have completely different experiences and expectations with regard to what happens at that next stage. For example, my experience in Silicon Valley is that Series A round really isn't about getting the math right. It's really not about getting the financials right. And frankly, it's not even about showing revenue or showing that you can get customers. The Series A round in California, to me, is almost more about showing that there's a sizable enough market and that you know how to achieve and secure and compete in that market so that from there, you can start to figure out how to grow a business and make money. And of course, Texas, as you and I know, Texas has got a little bit of a different experience. So I'd encourage, as you're moving to the next round, you almost have to think about where you're raising capital and the expectations or the experience or the conventional wisdom of that region of the world so that you can speak to it, right? So that you can speak on their terms, not because their terms are right, not because New York's way is better or worse or Silicon Valley's way is better or worse. That's absolutely not the case. But it is valid to appreciate that where they are means that they have different experiences. They have a different perspective on how this works. And as long as you speak to those terms or the mindset that folks have, depending on where they are, makes it a heck of a lot easier to have a conversation that gets right down to brass tacks, right? Gets right down to the details of what you're hoping to accomplish when you're raising money, or if you're in the investor seat, as you're hoping to deploy capital in a way that's meaningful, appreciating where that experience comes from.
Well, that's good advice. Used to be everybody went to the Bay Area or New York, but now there's many other places you can go to, and there the regional differences start to come up in a big way, and you need to navigate those waters carefully because there is money to be picked up in all of those places, but the way you do it is different for sure, and language and the seed, Series A, Series B methodology is also defined differently as well. That's always a little bit confusing too.
Yeah, I think that's exactly the way to characterize it simply. It's not too dissimilar from appreciating that raising capital for a healthcare startup or a health tech startup, frankly, is not the same as raising capital for a fintech startup, right? The advisors, the way that those companies go to market, the fact that they're both going to have regulatory challenges or could have regulatory challenges, right? The fact that there are outside factors that impact how those companies work and how they do business really differs, really varies the expectations and the way that they go to market when raising capital. Same is true by stage. Same is true by region of the world, because there are different regulations, considerations, experiences, partners, and so forth to have in financing and funding these companies.
Well, great. Well, you've done a lot of work in the media tech space. Not been up on it lately. What's new in that space, and how do you see it evolving?
A couple of thoughts. I love how, it was about 6 weeks ago, perhaps. Fred Wilson was in the news with a bit of a headline that said if there was anywhere to be investing at this point, it would be the media industry. And it's on my Twitter handle at MediaTech, VENT, because it doesn't fit. We pinned it because it was a really, really nice affirmation that there's something going on in the media industry that the venture capital community should pay attention to. And I think what Fred was referring to isn't media per se in a sense that anybody usually conceives of it. A lot of times when we say media, people immediately think of news media or social media, right? We tend to get this myopic tunnel vision on our personal experience or our personal perspective on what media means. When we refer to media in what we're doing and what I think Fred Wilson was referring to is that media really just refers to the content, right? The film or the podcast or the video game or the written content, if it's a news media site or a social media site or even a book publishing site, if you will, right? Those are all just forms of media. And one thing can be said with the highest degree of certainty we can imagine is that media will always play a pivotal and critical role in our world, right? It shapes our culture, it shapes our economy, it shapes what we know, it shapes how we connect with people. And so, fact, whether or not the economy is strong or the economy is weak, there will always be demand for media in some context, right? Could be entertainment, could be news, could be connectivity. And so what we've seen in the last year or so is affirmation of that, is validation of that. A lot of the big companies increasingly looking to how to participate in more innovation. A lot of the private groups, public funds, grants, federal money, looking at what to do about and how to participate in the media industry at large, because we know that the media industry plays an important part in what we all do. And then certainly a lot of venture capitalists increasingly looking at and saying this media space in particular is something and somewhere where we absolutely always have to pay attention, because we never know from where the next Netflix or Atmosphere or Electronic Arts, right? These are all media technology companies. We never know from where the next one's going to come. It could come from the Ukraine. And if we're not paying attention to how quickly media evolves in order to create value with that content, if we're not paying attention to it, we very easily and quickly can miss, as investors, a substantial opportunity that will completely transform the way the industry works.
What new technologies do you see coming up in the media tech space? It seems like there's a lot of challenges with it, with what's truthful, what's fake news, and who owns that, who controls that, and so forth. What do you think are the solutions for that from a technology point of view?
Wonderful question. In fact, one of my favorite questions, because I think that the media business, and we saw this a bit with South by Southwest, since we mentioned that, we saw this a bit in the last couple of years through South by Southwest. The media business has always been exuberant about, frankly, about very forward-thinking things, very, very almost disruptive things. And I share that, though, to point out that it's been exuberant about those things to a fault, frankly, that it's always been so forward that in a lot of respects, it takes our focus, takes our understanding and our appreciation off the more pragmatic and practical technologies. Here's what I mean, and my point about Southwest. Over the past couple of years, the media industry has been very, very hot on things like blockchain and artificial intelligence and bots, right? Things that are still wonderful innovations and a direction that we will eventually and increasingly go and see. And yet it's still so far out there. Those technologies are still so far in front of us that we're not quite there yet, right? We're not quite seeing blockchain as an example. We're not quite seeing that kind of infrastructure or technology as the solution to all of these things that we're desperate for in media. Things like intellectual property control and rights ownership and payments, managing payments for content creators. We're really not seeing any sort of AI or machine learning or data solution for your point about fake news. There's a lot of exuberance that we could possibly save to fix this question of fake news in the future, but we're really just not there yet. So what are the practical technologies? Well, one, a lot of excitement and enthusiasm for marketplaces, frankly, that if you think about the media business in a much more gig economy or workforce context, the workforce is flushed with designers and photographers and videographers and content creators and book authors, musicians, all of these people with incredible talent that's meaningful to the workforce. And there's really nowhere or way for people to easily find and hire them. There is no marketplace. And so there's a lot of emphasis on the idea of the marketplace, number one. Number two, distribution is a practical, pragmatic technology. How do we enable media producers, investors, content creators? How do we enable these people to more effectively and efficiently reach much larger audiences? And we're not talking about things like TikTok or Instagram, right, or influencers, where we see a lot of that kind of stuff in the media business. What I mean is more so the platforms that enable us to reach many more across channels. It's referred to as multimedia or omnimedia, across many different forms of media and many different channels as quickly as possible. And then number three is my last one. Number three is related to the second point. Number three is that we're seeing a lot more investment in understanding how media can be replicated across many different forms, right? If I produce a video on YouTube, well, why isn't there also a podcast, audio podcast? Why isn't there also a written version of the video so that if somebody just wants to read it, right, they can very easily? How do we enable many other creators and producers and so forth to very quickly be what's referred to as this multimedia format, so that wherever the consumer, wherever the audience wants to consume, they very easily can. There's no reason I have to watch a video because you only produce a video. There's no reason I only have to listen to a podcast through my smartphone. I could or should be able to listen to it on the radio too, and tune in to an AM station in the morning during my drive time and listen to it that way. How do we streamline and make that much more possible for people? That's where it's exciting this year. And frankly, that's where we're going to see a lot more discussion at South by South this year. A lot more of the pragmatic, practical conversations about what things are actually making media more meaningful and possible and accessible to everyone, rather than solving for these very future states with technologies that are not quite there yet, that are not quite accessible to everyone.
Well, you mentioned Fred Wilson, and he also blogged recently about the fact that new technologies tend to run in 15-year cycles. We had the mainframe world, and then we had the PC world, and then we had the mobile world, and then we have now the cloud world. But we're running near the end of that 15-year window. What do you think the next 15 years will look like, and what will be the vector? Will it be, because now almost everybody in the world is connected at some level. What is the next stage you think will come up? Do you think it'll be media focused?
Will it be media focused? No. Again, I think media is the content associated with whatever that might be, and that media comes in many different forms. A tweet is media, but Twitter itself is not necessarily media. Granted, it is, so maybe it's a poor example, but hopefully everybody appreciates my point. I don't think media is the next phase. I think media just iterates along the way, and we might refer to some of Peter Drucker's study back in the 70s and 80s that media is really just a form of every company, right? Coca-Cola is in the media business, frankly, right? Almost more so a brand and advertising company that just happens to sell a sugary soft drink that everybody wants to buy. but at the end of the day, the question is whether or not they can move and influence the media in order to do that. So I don't think media is going to play as prominent a role as it might sound given the work we're doing. I think the answer, I hate being too predictive because that's not necessarily how I think, but I think the answer might lie in one of two things. either a much more open source world. There are a couple of great quotes, and unfortunately I can't quote them, but I'm sure if you Google them, we'll dig them up pretty quickly. A couple of great quotes about the idea that open source is the greatest competitor that every founder has. That there's always someone somewhere else in the world creating a more open source version, right? A more free, a more accessible, a more collaborative version of whatever it is that you're doing. And so you get this notion that open source is going to eat the world. Open source is going to enable the world, depending on your perspective, I suppose. So I think the next phase could be a little bit more that direction. Or I really love the notion that what's really happening, I think this is very valid. What's really happening is that the next phase of technology is going to very simply be platforms. Amazon is a platform. Uber is a platform. Tinder is a platform. Facebook is a platform. These companies that are dominating sectors, dominating entire industries, are really just platforms on which other businesses and consumers and companies, on which businesses and consumers and companies can more effectively and efficiently transact and connect. And I think we're going to see a lot more platforms in political tech, in real estate, in transportation. We're going to see platforms in education. Texas is a wonderful place, I think, for all of us to focus for that reason. That Texas, if you think about it, has historically been a very traditional set of industries, right? The space industry, agriculture industry, real estate industry, and so forth. That Texas is a place where we're seeing the fact that all of these traditional industries are realizing what the internet can do, and we're starting to build these platforms that enable the entire industry and an entire sector or segment to transform, to change, and become all at once, to become a marketplace and a data company and a distribution vehicle for all of the participants in that given industry. I think that's where things are going to get a lot more exciting, more than the open source notion. Really just sharing with you two ideas as to what the future might look like, either more open source or more platforms. I'm personally more excited about the notion that this platform concept is going to grab the attention of many, many more investors and entrepreneurs very quickly in the next 5 or 10 years. And we're going to see a lot more platforms emerge in different niches and sectors and segments of our economy.
Well, if you look at the current platforms we have now and look at the big tech, Amazon, Facebook, Google, they have platforms. The challenge is once you use that platform, you're locked into it. You can't disengage and take your data with you and go somewhere else. You leave that behind. And so one solution people propose under the name Web 3.0 is that you should not break up big tech, but redefine the platform in such a way that you can, as a user, disengage, take your data, go somewhere else, and re-engage with another platform or many other new platforms that could come up, because now you're at some level portable with what you're doing, and you control your data and you control where you want to go. There's not, with the big tech, there's not that many choices out there today, but in the future, there could be many. You think that's where it's going to go?
I want it to go that direction. And I am enthusiastic and exuberant in saying this to you and to your listeners, that if anyone agrees with that, please let's talk, because the only way we're going to get there is to start collaborating in the direction. Here's a different way to answer it or think about it. I can remember when Netflix launched and I put together my list of the DVDs back when Netflix was still just distributing DVDs, put together the list of all the movies I wanted to see, right? At some point. And I had a list of 300 movies on my send me in the future kind of that Netflix had. And I remember thinking back then how frustrating it was that I couldn't take that exact same list and just drop it over in Amazon to have a list of the movies that I would love to have someone buy me. Or drop it over in Hulu when Hulu emerged, right? And say, all right, here are the list of movies I want to watch. It's the same list, no matter where it is. It's the same list of movies that I want to watch. Can I drop it over there? Notionally, the same idea applies to Amazon, right? I've written a review for a product on Amazon. Why isn't my review on every other platform where that product exists? It should be. It's the same review, right? But I vehemently agree with you that we people create content, we create information, whether that's information about ourselves or it's information about other things. It's still our information, right? It's still Paul O'Brien's perspective about the world and data about himself. And whether or not I own that is almost an irrelevant question, which I think gets in the way of the discussion today. We're talking about who owns the data, right? Does Netflix own that data, or Amazon own that data, or do I own the data? Well, honestly, I don't even own my own data. That concept almost needs to be squashed, right? I can't own my data. It's data. Someone else helped make it available, how someone else helped create it, et cetera. But it is my data, right? It is data about me. So why can't I do whatever I want with it and bring it wherever I want? And I think the answer lies in what we just talked about, that I think what we're going to see emerge are what you might think of as people platforms, right? Or even open source data sets about people, right? Because at the end of the day, can we force a Facebook, can we force an Amazon to give me all the information it has about me to let me move it somewhere else? Well, yes, sort of, right? Yes, sort of, because only within the United States can we establish a law that makes that a requirement. Dozens and dozens of other countries. I don't even know how many other countries are, right? But we actually live in a global economy, and the internet is a global platform. So we can't really think of the solution as the world requiring that every brand on the internet ensure that I can do whatever I want with my information. It just won't happen, right? There will be countries and places and laws and governments and so forth that just don't care and don't want to participate in that ideal. But I can conceive of how people can start to create their own open data sets, and we can start to develop this platform in which my information and my opinions and my friends and so forth are actually on the Paul O'Brien open data stack. And if I want to give that to Facebook or I want to give that to Amazon, I can. And if I don't want to, I don't have to, right? I think what we're going to see is more option, more of an opportunity for folks to decide for themselves, right? Whether or not they want brands and internet properties to have the information, or if they want to limit the amount of information that is given to them. It's going to be an exciting future because we do have these questions of privacy and security and data portability and so forth that are exciting to talk about. They're exciting to discuss, but we tend to miss the fact that legally, with regard to enforcement, they're incredibly challenging questions. And then frankly, with regard to the technology, they're also difficult questions for us to uncover. And so, yes, the next 5-10 years are going to be very heavily focused on what we all can do with information about ourselves and the information we create. What that's going to look like is going to be hard to say, which is why it's a wonderful conversation and collaboration for us all to keep working on together.
Well, that's great. Do you think that will come out of the startup community? You've talked about the topic of specialization for startups and investors. Let's talk more about that aspect of it and how that's important to startups and investors.
I do think it will come out of the startup community. And I think it will come out of the startup community in the sense that it almost must. That if this is a government-driven initiative, quite frankly, we're going to have government-oriented expectations, right? We see that in things like GDPR in Europe, and we see things like that with CCPA in California. Wonderful intentions, wonderful initiatives, right? The right direction. But at the end of the day, they're going to be oriented to that particular part of the world and the laws pertinent to that particular world. So I think it's difficult for us to conceive of how a government-funded or government-driven innovation program or R&D project or some such could actually solve this kind of question, number one. Number two, I think it's fair. I think it's valid to appreciate that companies aren't necessarily going to solve it either. I mean, at the end of the day, we have to be frank about the fact that we live in a capitalist economy for the most part, right? And companies do have the right and responsibility, but the right to manage their brand and the technology and the products and the investment they make in such a way that it delivers shareholder value. And so until that changes, companies are going to focus on what is most important for them. And it's valid to say they're probably not going to create these open data sets for people to do whatever they want with their information, because that information is valuable to those companies. That's not wrong. I think it's important that we appreciate that. So I think it's going to come out of the startup community in the sense that it's going to take some entrepreneurs and some technology folks who see the need for this, see the demand for this, understand how it could be done. And as entrepreneurs, put air quotes around you as you're listening to us, quotes, as entrepreneurs, these people are folks who don't necessarily play by the rules when we know the rules can be broken, right? We will find a way to do this. Startups will find a way to do it differently, do it better, maybe do it wrong, frankly, but that's the point of startups, right? Startups make mistakes sometimes. That's how we uncover new innovations and new opportunities. So I think it will come to the startup community in the sense that it has to, right? Someone's going to sit down and say, you know what? The entire world needs a way to enable people to do what they want with their information and control it and give it or take it or monetize it frankly, if someone wants to monetize their data, by all means, right? It's going to take somebody who sits down and does that and then really conceives of how that's technically possible, how it will matter to everyone throughout the world, and will actually work in a way that the companies then and the governments then will want to participate and support that, right? In a way that it will benefit everybody involved. And that's why I think it's an important conversation for us to have in the venture community, in the funding and financing ecosystem, because it's only through the support and the encouragement and the resources that investors can bring to bear that the startups and the entrepreneurs and the founders are going to be able to make the investments of their time and their experience and their technology, make the investments of what they're doing substantially enough to actually make such a monumental thing come to life and work. It's a conversation that we're having frequently throughout this year and certainly at Funded House coming up at South by Southwest.
Well, one of the stark or puzzling statistics that's making its way around the web these days is that there are fewer startups today than there were 50 years ago. And with all this tech and all the new people in the space and all that's going on, how can there be fewer startups and not more? And I just can't help but wonder if maybe Amazon shouldn't be one company, but rather it should be 1 million companies. But if everything's been concentrated because most of the laws that are being applied to the new tech is, well, they were made in the last century, really looking at the last economy, and they're really not built for the next one. And you see things like Facebook dealing with fake news and political lies and those type of things, as the laws really aren't in place to really sort those things out. We have to create those because it's a new economy and so forth. But I wonder if breaking up the big tech in some way is taking that and making that more than one company in some way, shape, or form, Web 3.0 or otherwise, open source or what have you, would put that stat back right, which is getting more startups in the economy itself. It seems just strange that we'd have fewer startups today than we were 50 years ago. What's your thought?
Well, it's funny that you said it seems strange, because I actually agree with that point the most. So much so that I question the data. I question how the data was generated. I question whether or not there's, you want to talk about fake news or media bias, I question whether or not there's a bias in the message that's trying to be conveyed. And that bias often, frankly, in the media industry, the bias is often even unintentional, right? That maybe it's a look at the data that looks at the kinds of companies or the kind of startups that we're talking about in a different way than we did 20 years ago. And so now the data shows something different than what it used to. It's biased, right? That doesn't mean it's true. Here's why I say that. Two thoughts. I'm a huge fan of Paul Graham's definition of a startup. And I think it's important to the question. What is a startup as opposed to a new business? Right? A startup, according to Paul Graham and me, if I could say I agree, a definition of a startup is a new venture in search of a business model, meaning, right, they don't yet know how to manage both costs and investments and revenues and cash flows and customers, right? It's not clear yet what the model is going to be for that thing. And I genuinely believe, I've seen it happen, that the media isn't always clear in using that definition. And no one is really, right? A lot of people have different ways of referring to a startup versus a new business. And we kind of muddy what those two words mean. So unless we're explicit in saying, hang on, that's exactly what a startup is and other stuff is not, then certainly we're going to skew the data unintentionally, right? We're going to bias the data without meaning so. And that's why I say it seems strange that, at least in my experience, we're actually seeing more startups than ever. I do also think we're seeing fewer new businesses, fewer small businesses per capita than ever. And that's because of things like Amazon, right? That if we classify a new business as a new restaurant if we classify a startup as a new restaurant or a new apparel store or what have you, yeah, the numbers are kind of down. Why are they down? Well, because Walmart and Amazon and so forth are sucking up the air in the room. And restaurants are working better by way of change than new independent restaurants. But in the classical definition of a startup, we're absolutely seeing a lot more. And that distinction is important for my second reason, that I think the data may be off. I personally can't stand the word big tech. What the heck does big tech mean? Right? If you ask a politician in Washington, what do you mean when you say big tech? All they probably could say is, well, we mean Facebook and Apple and Google. What the heck does that mean? You don't even know what are we classifying when you say big tech? Because Motorola is a tech company. GM is a tech company, right? Tesla is a tech company. And SpaceX is a tech company. Are they not big tech? Well, why don't they fall into the same bucket as whatever it is that you're trying to admonish when we say big tech? I don't think tech. I don't think these these big companies should be broken up. I'm just not an advocate of that methodology. I think that when we refer to tech, what we're referring to is really just innovation that's applied, right? Something new to the world is making a meaningful difference, right? So a completely new tire, right, is an example of technology. And you absolutely could have a startup that's trying to figure out how to bring a completely new tire into the world. That's technology. And it's not helpful to say technology or to imply technology means internet or technology means semiconductor, when in fact, technology also means so many other things that are being invented and brought to life. Technology is what we do in the pharmaceutical industry, right? We invent new medicines. We invent new apparels, right? The fabrics in our apparel. Well, that's technology. So in thinking about startups and how to better invest, I think that the question investors might be trying to uncover and learn more about is not what's going on in tech, because what the hell does tech mean? The question is instead, what's going on in the niche, in the sector, in the industry that I love, that I'm familiar with and that I know, right? What's going on in finance? What's going on in apparel? What's going on in retail? What's going on in transportation, right? In every single, what's going on in food and beverage? Back to my point about Coca-Cola being a media company, right? Even in the food and beverage space, there's an insane amount of technology being developed to enable new production methodologies, new bottling methodologies, new transportation methodologies, new beverages. A new recipe for a beverage is technology, right? It's completely new to the world. So what's going on in that food and beverage space, if that's what you, an investor, if that's what you know and love and really want to support, pay attention to the technology they're in and invest there, because there absolutely is technology changing that industry from the bottom up and from the top down. And that's where investors can find the best opportunities that suit their interests and find a way in which to not just deploy capital to make a difference, but to deploy their experience and their network and their advice and their perspective in a way that's going to make a meaningful difference to those startups and those technologies, so that those startups move on from being new ventures in search of a business model to being companies that are actually employing people and making money and hopefully driving towards an exit for that investor.
Well, great. Well, we have so much technology and many platforms. It just seems like there's still plenty of the world that's not yet been automated. There's plenty of applications to be put into place, and there's plenty of new data sets to build. And so there's a huge amount of potential there left to be done. We're only just beginning. I read the article the other day. It says we're just at the end of the beginning of this revolution. And so now it's taking into a next generation where, in one view, is it's going to go out from the core of where technology has been to all the other parts of the world where it has not been. There's plenty of things that are not automated. There are plenty of things that tech has not revolutionized yet, but we'll see where it goes. And then you have climate change coming up, where I'm a believer that next generation, we're going to see a lot of technologies move into carbon sequestration, clean tech, and other things, as we see Venice go underwater and Australia turn on fire, that this is becoming real. And so technology is going to move in that direction as well. What are your thoughts about that?
That's a great direction for us to go, to deviate a bit from my own personal and professional experience, because of course I'm not in the environmental or energy business, but I appreciate the implication, and I appreciate the need for us to focus on the space, and I'm passionate about it. And so how do we apply what you and I have been talking about, Hall, to an industry that my example is that I'm not familiar with? Well, I think it's like this. As an investor or as an entrepreneur, I can't just look at climate change. I don't even know what to do with climate change, right? It's such a big idea that there's technology throughout what's going on in climate change. And what on earth? How do I participate? How do I make a difference? I don't know. Right? Is climate change real? Is it carbon? Is it fake? Who knows? Right? I'm not prescribing my opinion. I'm just sharing how complex an idea that is. What we investors and what we entrepreneurs can though do is focus on where we know we're impacting the climate, right? We could focus on transportation if that's our niche and our specialization. We could focus on plastics, right? We're seeing new technologies emerge that are digesting and recycling plastics in new ways, right? I think that's amazing. So we could focus on bottling and packaging, right? There's a niche that is attainable, that is manageable for us. We could focus on energy, right? Clean tech, if you think about it, clean tech really is just the energy industry, right? What we're referring to is a way for energy to be more clean, right? To be more sustainable, to have less impact on the environment through technology. Well, so it's really the energy business. So are we paying attention to what Shell is doing and what BP are doing. Are we paying attention to what's going on in solar, right? If you know energy, then you can absolutely make a difference with regard to the climate and the environment when we better appreciate that our contribution, our investment can be made in things like clean tech in particular and the way the environment works or the way the energy industry works. Same could be said of water, right? Same could be said of agriculture. Now, step outside the obvious environmental considerations, and you can get back into my world a little bit. Can the same thing not be said of the media business or the political tech business? What's going on in politics? Well, of course it could be. Can we not develop data sets or automation about the media to uncover what it's talking about, what it's promoting, what it's evangelizing, what it's teaching, what it's exploring with regard to the climate? Of course we could, right? So if you're in the media business and you want to make a difference with regard to climate change, you could focus on the media business and do that. Same thing with politics, right? Could we not create a data set or a search engine to query what are all of the different forms of legislation that are being considered throughout the world that will impact the climate? Who are the legislators? What are their opinions, right? Can we actually figure out whether or not these legislators and these politicians are full of hot air or if they're genuine and serious? Can we actually figure out if they're actually making a difference or if they're just showing up at the World Economic Forum and saying we must do something? Sure, we could, right? And so if your domain expertise is actually in politics and you want to invest more in transparency and accountability in politics while having an impact on the climate, you could do that. You can do that. Think about it. The point is, think about it in a more accessible, attainable, familiar context. And suddenly we can better appreciate how quickly we as investors or we as entrepreneurs or we as advisors or we as companies, frankly, can find the right peer group to focus all of our energy, all of our resources, all our experience, all our talent, all of our entrepreneurship on fixing what we can actually fix, right? Rather than trying to address and impact the entirety of something like climate change, right? Start to focus, start to specialize your attention better because it will result in a greater impact that you can have as an investor, and it will result in a more meaningful impact that you have in making those investments because you'll be able to participate in a way that is more than just making an investment and looking for a return, right? You can make the right connections to people, give them the right advice. You can continue to live your life in a space, in a sector, in an industry that you personally are passionate about and care about and really make a meaningful difference. If anything, right, that's a reflection of the classical definition of an angel investor. An angel investor is involved in what they know and love because they're an angel. They're not just a business investor. They're an angel. I'm here to help and I care about and I'm passionate about this particular thing that I want to invest back into to make a difference in. Be an angel investor for the climate, right? Be an angel investor at heart and put your money where your passion lies because that's how it can make the most significant difference.
Well, that's a good point and appreciate the concern for angels there as I'm one myself and always appreciate when angels get involved and what they bring to these cases as well. The last few minutes that we have here today, what else should we cover that we haven't?
Man, that was a wonderful set of topics, right? The platforms of the future, the impact we might have on climate change, what's been going on and what's exciting in the media business, a little bit of a sense for the coast of the United States versus Texas versus the world. I think we covered a lot, Hall. I might only encourage and share as a final thought, a reminder that yes, South by Southwest is coming up. You and I are here, so come visit us in Austin, Texas, and what do we have, 5 weeks? 6 weeks till the big show, and encourage that everybody join us and just Google it up. It'd be the easiest way to do it. Take a peek at what's going on at Funded House. Come meet with us there because we're having this very kind of conversation in person. Come join us on MediaTech Ventures if you're passionate about the media business in particular, because we're doing our best to serve the industry at large, to serve those founders and startups and entrepreneurs as well as the investors who are passionate about the media industry in whatever context that might be. We'd love to connect and help out. And thanks all to you because it's this form of media podcast where we're talking about investment, where we're talking about entrepreneurship. That is, frankly, it's kind of an example of the way we think it in MediaTech Ventures. And again, what we're trying to do with Funded House. We're trying to enable more investors to better connect with people that know, people that want to help, people that can teach, people that can explore and expose, people that can introduce the investment community to these wonderful opportunities that are out there and seeking support and engagement with people that have the resources to make those ideas come to life. So let's keep doing what you and I both are doing, and welcome everybody to Austin in just a few weeks.
Great. Looking forward to it. It should be fun as always. And want to thank you for your time today, and glad we could catch up. As always, it's been inspirational and eye-opening and thought-provoking. There's a lot of great thoughts there to unpack and have to start going through it. But appreciate your taking time.
My distinct pleasure, Hall. Thanks everybody for listening. Catch you all online.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org.
Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinions of Investor Connect. This podcast is for informational purposes only and should not be relied upon for the basis of investment decisions.